Right, welcome back. 15 minutes into the cash market session, we're looking at shares of, this is Vanke. These are the 8 shares listed here in Hong Kong, down to 5.5%. Of course, the big story was Bloomberg has learned that Chinese authorities are mulling this potential rescue plan that would help plug the funding gap worth close to, $7 billion. Let's bring in our team. Our China correspondent, Min Min Lo, is here with the details, along with our Bloomberg Intelligence real estate analyst, Kristy Hung, to talk us through the implications there. Min Min, I'll start with you. What do we know about this plan that's being mulled?
So the government is mulling allocating about 20 billion yuan in local government special bonds to buy up unsold homes and vacant land from Vanke to plug a funding gap of about 50 billion yuan. So aside from that 20 billion yuan, Vanke is said to be allowed to look for other financing sources, including loans or issuing new bonds. This came after Vanke warned that it was facing record losses of $6.2 billion last year, and a management shakeup where 2 executives stepped down, and then Shenzhen Metro, the biggest shareholder there, came in to take over the reins of the company. And it's a sign, I guess, a shift in Beijing's stance. This is something they are doing quite differently from what happened when other private companies like Evergrande were facing defaults. Perhaps they are drawing the line here that this is a state-backed company that is perhaps too big to fail. It employs about 130,000 people, and maybe ring-fencing that fear of contagion from spilling over from the private companies to the state-owned ones.
To that point, I mean, this is $7 billion. It's, as far as I'm aware, the first time that local government special bonds are going to be utilized to actually bail out a property company. To what extent is this a game changer for the property sector? And is the local government actually incentivized to do this? Are they going to want to go out and actually sell bonds to save this developer?
Yes, so the program is new. We only started in October, so we do see, a shift in the stance from the person at the top in, trying to halt the housing slump in China. But I think what our worries right now is that, we are all aware of the 300 billion yuan PBOC facility to help local government buy unsold homes. That facility is very little utilized. It's, I think, as of September, in single digit. So local governments, they have their own agenda. And I think the biggest problem right now is affordable housing projects in China is not profitable. In many cases, we're talking about rental yield that is lower than funding costs for the project. So local governments, they are not enthusiastic in doing it. So we will need to stay and watch, are they going to step in and help to buy unsold homes from Vanke to really help turn around its liquidity, because many cases they are very selective on the projects. They want the project to be in central area. They want to acquire on block fully unsold buildings, and then they want transportation links, etc. So all these added together, local governments, they have been very selective on the projects they're acquiring. So we have a big price tag here, 20 billion yuan, but how much of it would be utilized? Because we had 300 billion yuan from PBOC before, and again, that was only utilized by single digits.
Right, and the temptation was, we take this formula, and the formula is already fraught with nuance, as you point out, right? And apply this to the funding problems of other developers. Is that too big of a jump to do at this point?
Right, I think we, based on the news report, we have assessed a 50 billion yuan funding gap for Vanke right now. And I think the danger is that the 50 billion yuan is just an assessment or a snapshot of what they are facing right now. But if you look at Vanke's contractor sales in January, it's down 43%. So in the worst case scenario, if that degree of decline is going to extend throughout the rest of 2025, we're expecting another over 100 billion yuan sales shortfall versus a year ago. So this is a dynamic concept, and if sales slump is continuing, then the price of a bailout would be bigger. So what we are talking about in the news, 50 billion might not be enough, further down the road. So I think authorities would need to think about stepping up its rescue to really help turn around the liquidity, which is why you're seeing in the share price right now. Today, shareholders are, investors are not convinced. The 50 billion might help to buy time for Vanke, but if we want a true turnaround in Vanke's liquidity, I think more needs to be done.
I'm also curious because your research, you wrote that you're expecting contracted sales to come down by 25% this year, which is significantly higher, I think double of what consensus forecast is. What is underpinning your forecast?
Right. So in our base scenario, we're already expecting sales decline to narrow from the 43% we have seen in January to maybe 20% in the second half of this year. But I think at the end of the day, Vanke is facing a shrinking project pipeline. Land spending last year is down by 88%. So it's running our project to sell. It's also talking about selling its unsold homes to authorities that would reduce its sellable projects. And at the end of the day also, Vanke has 2/3 of its land bank in China's weaker tier 2 and low tier cities. So those markets will continue to be weak, and we expect further price cut pressure from there. So it's good to have government rescue measures to help it buy time right now, but turning around the operation, we still continue to face a lot of challenges.
I mean, given all of those challenges, when we think about this, what's happened at Vanke, this bailout, is it really a Shenzhen story? And actually, is it really a Vanke story that's not going to be applied to other developers?
Right. So I think Vanke is very unique in the sense that it has 27% stake from Shenzhen Metro. So it has this state link that is different from, for example, Longfor or Season, the other private developers that remains to be softened. So I think it's a special exception right here that we need to put a line in the sand in drawing the line in saying that we will need to prevent state-backed developers from failing, because otherwise it would risk spilling over to investors have caution about perhaps Jinmao or Yueshou. These are other government-owned developers. If Vanke is to fail, people will start questioning about the other names.
Okay. Yeah, the fundamental question about moral hazard in China, which has underpinned so much of this kind of repricing of risk that we've seen so far. China correspondent Min Lo and Bloomberg Intelligence real estate analyst Kristy Hung there.